Then on the other hand, if it's a status quo Biden, and would that be a positive impact then?
If you only narrow down to this one single factor, yes. I mean, it's Trump is more aggressive in tariff. But if you look at the whole thing, we cannot really say that. If the Biden administration continue, whether it's really will be much better than a Trump administration, we don't know yet.
Hi, welcome back to the Curious Investor series, the series where we break down financial topics and help you make informed investment decisions. Today, I'm Lana, and I'm here with Redmond. We are going to explore the upcoming U.S. presidential election, its impact on the financial landscape, especially for Chinese market and the renminbi. Redmond, what's the current status of the election?
I think this time is both Biden and Trump pretty much has already secured nominee status within their own party. And so Biden is presumably will be the nominee for the Democratic Party to be officially announced in July in the National Convention. And for Trump, I think he will be officially anointed as the nominee in August, National Convention in the Republican Party. So unless there's something unexpected happen, so it will be a rematch between Biden and Trump. And this year, however, is really interesting. Is the third part, those kind of, some candidate, independent candidates, is other than these two parties. I would say they don't really have high chance, but they cannot be completely insignificant. So they are. It's very interesting. It's not just these two, but there's always a risk that maybe an independent candidate can get some traction.
So we all know that Trump is now leading in the poll survey, and he's threatening that he's going to impose a 60% of tariff on the Chinese exports to the U.S. That sounds prohibitively high. And do you think that's possible?
Yeah, the short answer is yes, it's possible, unfortunately. Because even though the power to regulate commerce with foreign countries in the U.S. is with the Congress, but under the legal system in the U.S., and some of those power has been delegated to the White House, the administration part, i.e. Trump, if he got elected. And so if you remember back in 2016, 2017, when he his first term, he started his first term. He raised the tariff in 2018, effectively, 2018 on China. He made use of the power, the retaliatory authority granted by the Congress to the administration arm under the Trade Act 1974.
So will it affect the Chinese equity market then?
Yeah, I mean, if the additional tariff is being applied across the board, for sure it's negative. So, but how negative depends on, of course, is many other situations at the time, but definitely it's a negative.
Then on the other hand, if it's a status quo Biden, and would that be a positive impact then?
If you only narrow down to this one single factor, yes. I mean, it's Trump is more aggressive in tariff. But if you look at the whole thing, we cannot really say that. If the Biden administration continue, whether it's really will be much better than a Trump administration, we don't know yet, because the Biden administration also, the policy is also evolving, and that's one important thing is what we have been seeing over the last few years. In fact, there's what they call the political scientists call dual convergence happening in the United States policy towards China.
What is a dual convergence?
Number one is the convergence of policies thinking between the Congress and the administration. So the president, the White House, and the Congress are thinking more alike how they are going to deal with China. Second is the convergence between the two major parties, the Republicans and the Democratic parties. And also the attitudes and approach towards China are also converging. So that is what they are called dual convergence in Chinese policy formation in the United States. And also, this I want to point out three key developments over the last 10 years in the US. And number one, and since up until 2016, I mean, China, how to deal with China? I mean, they talk about it during an election campaign, but it's never really the top or major policy issue in the policy agenda in the election campaign. And including the time of Clinton, Obama, I mean, never really. But I mean, it's only since 2016, and then that became a key election campaign issue, and also happened this time. And so I think that is not just about presidential. The key thing is also became a key campaign issue in congressional election. So in the election for the House of Representatives, for the Senate, or actually China over the last 10 years become increasingly a hot topic. And the direction that the trend is now is that they are pointing finger on the other side to be who is actually weaker. So you point out they are pointing finger, say the other side is weaker. So that it's very difficult for any politician to walk down, and actually it's escalating. And then the second change is the Congress activism. In the past, the Congress has not really spent so much time talking about or China and enacting bills about China. That's also changed over the last 10 years. And just give you an example, I mean, in the 116 Congress, that's between 2019 to 2021, and the bills and also the investigation hearings about China actually tripled from the previous Congress, from around 100 to more than 300 hearing, and many of those actions actually came into law. And then in the 117 Congress, that's from 2021 to 2023, and the number jumped to 450. So Congress has become more and more interested in, enacting new law and things like that, and also hearing investigation regarding China. So you have so that is not going to change whether Biden or Trump being the president for the next 4 years. And the third development is the political scientists call securitization of economic policies. This sounds like what is happening in China, right? But actually, this also has been happening in the US over the last few years. And what it means is now both the Congress and the administrations is looking at economic policy through the lens of national security. And that makes the China issues very difficult to go away. And so to sum up, either Biden or Trump, the Sino-American relationship will be bumpy in the next 4 years. But the emphasis may be a little bit different. Trump probably will focus more on trade, and Biden probably more targeted on technologies like the semiconductors and so on.
So how should currently investors prepare for this situation?
I think the changes will be quite gradual, and we'll be hearing more and more, so the investors have time. And I think it's probably will be some thinking of maybe the investor can start looking at how to allocate the sectoral allocation. Maybe there's some changes, or industry allocation and geographical allocation as well. And the reason I'm saying that is because, for example, actually that has already been happening. So under this trade tension over the last couple of years, and those reshoring and de-risking and so on, you have been seeing business already moving production to other countries out of China, like in the ASEAN country, India, or Mexico, and so on. So if you look at the trade data, you can see that pattern exactly. Is that you see China exporting a lot more intermediate good and capital good to ASEAN and India, and like Vietnam also. And but at the same time, is that this country, ASEAN country, and India exporting a lot more to the US. So you see, so that means you can already imagine, you can already say, okay, maybe that for those Chinese companies making assembly, iPhone, maybe more doing a more difficult business. But at the same time, those making parts or equipment or parts supplying to those factories in Vietnam or India, those will be making iPhone now. And so those Chinese companies may be doing okay. So and also those making capital equipment also. And also if you look at from the two sections, you also heard about it, the Chinese government thinking more about the industrial policy that will also support the technology, innovation, self-reliance, so the advanced manufacturing and so on. Another example, like instead of buying stock which make a notebook computer and so on, that maybe you will be thinking about those companies that be doing a lot more data center or supplying to the data center, and those are 5G and so on. Those will be getting some tailwind from China's industrial policy. So, I mean, investors should diversify, looking at for other opportunities, and I think that is what the investors should do.
What's your view on the renminbi?
I think that will be challenging, but the most challenging time probably will not be coming in the near term, maybe towards the end of the years, approaching the election, and also post-election when if Trump get elected, and then the focus will be on the tariff and so on. They will be under a lot of pressure. Then we will be under a lot of pressure. So for those really, I mean, we are not giving any investment advice here, but for those experienced FX trader, and maybe can pick a level to say start, establishing some bearish bet on the renminbi may make sense, for example. And for those investors or traders who have a good experience in options, and one thing they can do is do some candle spread. What I mean by candle spread is you will be, doing options with different expiry days to take the advantage that the movement more actually happening towards later this year or next year. And so you have the longer dated options, you probably buy some, and then you sell some short-term options to help to pick up some premium to reduce your cost. So those would be, I think, interesting trade for those really professional, experienced investors. But once again, this is only sharing some of the very general observation. It's not trade recommendation for this kind of securities or futures options. Involve a lot of risk, and it's not for everyone. So, but anyway, I think the bottom line is I think things are changing, but the change will be gradual, and so investors should start doing more research and looking at for more different types of instrument, different industry, and then start preparing for.
Thank you, Raymond, for the insightful sharing, and thank you all for watching, and stay tuned for more videos.